Analysts at Meristem Securities anticipate the positive momentum in the local market will continue, barring significant sell-offs on large cap stocks that could potentially sway the market in a contrary direction. Sodiq Safiriyu, investment research analyst at Meristem Securities, joins me now for a market update. Sodiq, it's a pleasure to have you on the program. Clearly, there is more optimism about the outlook for the market following the swearing in of a new president in Nigeria, and of course many of the policy changes that have followed that. But the big question is how sustainable this is. It does appear to me that you are of the view that this market run still has some ways to go. What, in your view, will be the key drivers of the market from this point?
Thank you very much for having me, and thank you for your question. So the way the market has been, we've seen that positive momentum from investors. There has been that increased optimism in the present administration. We saw the immediate reaction following the inauguration of the new president. On that day, that the trading day following that inauguration, we saw the market gain about 5%. Also, we saw following the suspension of the CBN governor, we saw reactions from domestic investors and even foreign investors. Buying activities into certificates on the index, and we saw about 3% on 2 trading sessions on that week. So for me, what I find that will be sustainable for the market going forward is, that implementation of policies that have been laid down by the current administration. It is important that they follow through on these policies, essentially because investors are interested in seeing the execution. They have started giving investors something to look out for, to try to anticipate. For me, it is important that the government, continues with the implementation and execution of their policies. Also, there will be the fundamentals from the companies that would be greatly important to ensure that investors find a way to put in their money. So the consolidation of these factors essentially would be important for the equities market to maintain the positive momentum going forward.
I completely understand the market reaction, but then if we drill down a little bit, I think there are still some unanswered questions. For example, many are suggesting that the inflationary pressures could be significant on the pockets of the Nigerian, and that obviously will impact consumer demand. There's also the view about the inflationary pressures and the impact on the cost of manufacturing, for example. And we know with the revision of the foreign exchange policy, that also has some implications in terms of inflationary pressure. So have you built all that into your outlook, and how do you react to those who say those potentially are problems down the line?
Yeah, so very, very, very correct, because obviously these are macroeconomic indicators that cannot be overlooked. We have the increasing inflation pressures across, the increasing inflationary pressure in the country. And it's important because, it affects consumer demand and also puts people down into the earnings of the companies. But again, the investors are looking at, they are trying as much as possible to look for positive real rate of return, right? And in this case, they will try majorly they will be playing into the foreign they'll be playing into the equities market mostly. And because of this, we've been seeing that increase we've been seeing the increased buying activities, across this tickers. Majorly again it's important to highlight that these factors do not affect all tickers in the same way. So there are pros and there are cons. There are some tickers that are able to pass down this cost to consumers. And again, there are some other companies, more importantly, some of these policies that have affected the banking industry positively and also could affect the oil and gas. We've seen reactions, across these tickers. So again, while I understand that, it's important to consider the inflationary pressures, and yeah, it's an important macroeconomic indicator. Just today that it has been increasing, and because of the increased optimism in the new administration, investors are open and they are willing to take the risk that the new administration would do important things to ensure that this they will abate the rising inflationary pressure.
Right.
So yes, we will still see activities across the can that are able to edge these factors comfortably.
All right, so Sodiq, we'll leave it there.